I think the biggest question going into the back half of the year is, does this rotate? You know, does what has led us to this point now start to take a back seat?
I think that's a good question. And it was last week that we saw the average of the S&P 500 stocks that are dividend payers, that the average of those dividends actually superseded the 10-year yield for the first time
and the 30,
going back a decade, which is pretty interesting. And I think you bring up a good point for people who are investing in these areas. What happens when that does reverse? If it does reverse, do we start to see some of these dividend players come back down to earth? Because ever since Q2, really, we saw a lot of hedge fund positioning in defensive sectors. So this is a trend that's been going on for quite some time now.
We usually think about them as momentum players, and the momentum names you think, oh yeah, sure, it's tech. No, it's the utilities this year. That's what kind of year it's been. Moving right along, our David Faber confirming that WeWork parent company, the We Company, will pursue an IPO valuation of between $20 and $30 billion. That's far lower than the $47 billion figure that was initially bandied around. And he was saying this morning, even that $25 billion mark might be a little squishy.
This still is very, very much in flux. Even people I was having conversations with a couple days ago surrounding valuation were saying that it could be slightly higher than that. So it's clear that things are kind of a moving target for WeWork. Their actual launch date hasn't been set yet, from what I can tell. They're banting around a couple of different dates and ideas, but until that date is set, until they're actually on the road, it's really hard to get a sense of investor demand for this company. But it's clear that headline after headline that comes out has caused sentiment to be much lower than I think a lot of the executives were initially
anticipating. Trademark headline,
yes.
That to me was such an interesting little window into this company where the CEO sells the trademark to the company and then ends up, I think you saw it today, saying, all right, never mind, I'll give the company the money back.
They reversed a couple of things that were kind of bad for publicity. One was that trademark thing. This was where Adam Neumann effectively paid himself $5.9 million in order to trademark the company We Company, compared with WeWork. There was also publicity, CNBC included, that pointed out the fact that they had no female directors on their board. Well, yesterday in an amended filing, they came back and said, we actually have appointed Frances Frey, who's an academic, female to the board, effective after the IPO. And then we have an intention of improving our diversity by appointing one more person. Then this valuation news comes out. It seems like they had kind of these intentions of doing one thing, and then within the last few days, they're walking things back, including the valuation is just a piece of that.
Yeah.
I'm curious when these companies are going to have to show a path to profitability. I mean, how many losing numbers can you see?
Amazon.
I'm just, if you look at Uber, if you look at Lyft, we've seen it this year with their big IPOs, and they say at some point we're going to be profitable, but we don't know how and we don't know when. I'm just wondering whether the pressure starts ratcheting up to start thinking about when we can turn this profit.
It's one thing if investors say, okay, we get the long-term picture, we're going to give you some rope and kind of figure this thing out. When they don't understand what that business model, if that's really going to work long-term, obviously they're not so willing to give them the space to think.
Here's the thing, though. I mean, when you ratchet down expectations for your valuation that much, the silver-ish lining in that is that there's now runway for the stock valuation to go higher. Right. So we've been talking so much about the elevated valuations. Right. Yeah. So when they priced it lower, it may give the impression for some investors out there, whether they are smart and sophisticated or not, that there's the potential for this company to grow into the last private valuation round that we saw and beyond. So if there is that case,
versus being overly hyped
and setting expectations so high up there that you can go nowhere but down, this might be one of those situations where you say, okay, let's see, maybe we allocate a little bit to this given the fact that we have a slightly less valuation than we thought we were going to.
Yeah. That's true, with the one caveat being that SoftBank was kind of the key investor that set that $47 billion valuation. So
and they have a serious axe to grind. There's no doubt about it. But I mean,
it's fine. They've got a couple $100 billion. They've got a long time to wait for this to work out.
And multiple vision funds and everything else.
Yeah, true. Moving right along, some big news this morning. Facebook launching its dating feature in the U.S. today. This product will be available to users 18 and up and will give Instagram users the ability to integrate their posts directly into their dating profile. Look at shares of Match Group. They own sites like OkCupid, but importantly, Tinder. And they fell about 5% of the news are still down at those levels today. Facebook up about 1.5%.
Match should be scared. And here's why. I checked it out, even though we're all married, but in the name of research, I went on to check out the dating app on Facebook. And you know what? It's super easy to use. Your profile is already there. They already have all this information about what you like.
Is it anonymous? I mean,
they say that they don't post.
Anonymous,
they don't post your dating stuff on your Facebook page, so that supposedly there's no crossover in that.
Because your parents might be on your Facebook page.
Yeah,
you
it's
don't
your
want
family.
them to see.
Your husband might be on your Facebook page. I mean, does your husband? I never press confirm because I didn't want there to be a story on page 6 about my dating profile. But at any rate, the fact that it's free makes that even more attractive, and it's super easy to use. Where with Match, you have to go on, you have to sign up. There's a subscription. There's the profile. This one, it's all there. Your profile picture, if you want to just navigate it over.
And we knew this was coming. The Match shares were down about 20%, I think, on the day this was first announced a couple of months ago. And in fact, they're falling again today. Just tells you about the nervousness.
We've already talked about the idea for years now about how these dating platforms have a fairly robust install base. But they're nowhere near as robust an installed base or sticky as Facebook or social media in general, those platforms.
You need Facebook just to have a Tinder
So people talk
profile,
about total addressable market.
Yeah.
I mean, when you're talking about opening up a dating world to hundreds of millions of people, not to say that they're all, but the pool is huge. And so if you have a TAM, a total addressable market that big, maybe it's worth it for some investors to take a look at some of the Match, Tinder / whatever platforms and say, hey, this is a formidable competitor.
Sure.
And we will ratchet down valuations because of that.
Yeah, and we'll see just how popular this one proves to be. Contessa will let us know. She's matched.
Are you really?
I'm going to keep it secret.
Before we go, the 100th season of the NFL does kick off tonight on NBC. It's a showdown between the Bears and Packers, and ratings actually rebounded last year for the NFL. They were up about 5%. The real question is about network TV. The influence there just keeps growing. Look at these numbers. Last season, NFL games and related programming made up 24% of NBC's overall ratings. This is from Moffett-Nathanson. 25% for CBS, over 60% for Fox. Oppenheimer today upgraded our parent company Comcast, saying, among other things, the street's underestimating their ad revenue, also saying it's really the internet, which is the strength of that business. But there's a lot at stake for how well the viewership goes this NFL season.
It's a far cry from anthem protests and everything else that we were talking about just a couple, 2-3 years ago, right? I mean, this idea that the NFL has the kind of power that it has, and it's something that Jerry Jones talked about on our air, just this week,
yes,
in terms of the contract that he's giving out, in terms of the players and what they're worth and everything else. What it comes down to for football is whether people are going to watch, no matter what platform it is. To me, this is the most fabulous time for sports. For me personally as a fan.
Most fun.
It is the most fun. I look forward to it every year. My fantasy football draft went off a couple weeks ago, so I am primed and ready to go. And you get the feeling like I'm just one of millions and millions of Americans out there who are feeling the exact same way about the franchise.
So a couple of questions hang over this. Obviously, the trends with the younger demographic. The NFL launched itself on TikTok this week, just trying to kind of stay relevant in that conversation. Concerns about health and safety. Andrew Luck's retirement kind of coming at an inconvenient time for all of that. But just like last year, Patrick Mahomes really ignited a lot lot of excitement. We talked about the
Kansas City. We should talk to Leslie about this.
Leslie knows this one so well.
She's wearing her Chiefs red right now. For
that's right. Exactly why I wore the red today.
But that's what it comes down to. I mean, if they have the stars and the storylines,
people will watch.
And they do.
Yeah.
They do.
But we're
not even going to talk about Antonio Brown and what happened this afternoon with that development.
Suspended, apparently.
I mean, we'll see what happens. But
I will say that Amazon, which got into this game as well last year, is showing us the way that streaming could be challenging broadcast networks. And if they can ramp up their coverage to include those storylines, the stars, and all the things that the broadcast networks know really well how to do far better than the upstarts, it could prove challenging. Right now, football and broadcast, it's a symbiotic relationship. Football needs the broadcast, broadcast needs
And the
football.
question is who needs who more. And so Moffett-Nathanson's note says to watch Disney in this regard. I know that Disney has a million other things going on, but if ESPN, which apparently is suffering kind of viewership declines from Monday Night Football owing to the quality of these games, says we want the Sunday night package, we're going to pay up for that. It's the ripple effects of that and whether Disney goes for that is going to tell you a lot.
The other thing that I think is going to make a real difference in how football fares in the years to come is mobile gambling, because as more states
Absolutely.
adopt sports betting on your phone, not just that you can go to a sports book and do it, but that you can be watching and betting play by play.
How many new shows are there just dedicated to sports gambling?
And I would say this. I mean, if you take there is no such thing as a surefire, 100% guaranteed certainty trade or anything else, not in the markets, not in media or television. But the one thing that has come pretty darn close to a surefire way to make money is the NFL. And it's been that way for decades at this point. So maybe,
making me nervous already.
Yeah, I know. Right? Did I call the top? Maybe. Yeah.